Well, as people exit the stock market and look toward other investments, one consideration may be real estate. But where should you invest? Greg Rand, radio host and CEO of real estate website OwnAmerica, joins me right now with two cities he's looking at right now. First of all, welcome. Let's talk about the general real estate market. Existing home sales coming in at 8-month lows. Right. Yet we still have mortgage rates falling at 4.15% today, the Freddie Mac 30-year. So if it's not a good time to invest in real estate now, when will it ever be a good time?
Well, it is a good time. That's the point, is that as bad as the housing market gets, that's as good as it gets for investors, because home ownership rates going down, rental demand going up, rental household creation going through the roof, rates are going up on rentals. So from a landlording perspective, the buy, improve, and hold play, that's the one that's working right now.
Why were existing home sales so low, though? What do we need to see to turn it? I mean, confidence, to get investor confidence to say, aha, now is the time to get in.
Right. Well, don't forget that last year, this time, the home buyer tax credit was expiring. Okay. So existing home sales last July were crazy, through the roof, record highs. And so being off 3.5% doesn't bother me that much. Okay. But truthfully, right now, nationwide, 23% of all the sales of homes and condos are investors buying them. So unemployment ticking down would be nice. Okay. That does drive consumer confidence. But I don't think we have to see an overall resurgence of consumer confidence for the home ownership side of the housing market to surge again. But the investor market is kind of opposite of it right now.
All right, I don't have to tell you, it's all about location in real estate, isn't it? And you've got two cities that have really been depressed and hit hard, and now you think it's the time for them to rebound. Let's start with Atlanta. Okay,
Atlanta, your hometown?
Yeah, that's exactly right.
Okay, great American city, has been through the ringer, all right? Home prices in Atlanta are down below where they were 10 years ago, and there are explainable reasons for that. So we look for short-term pain, long-term gain, all right? Atlanta had a development boom. I mean, absolutely crazy development. During the peak, we were talking about 5,000, 4,000 new building permits a month being issued in Atlanta. Now it's down below 500 a month. So supply is being suppressed. Prices are down below the trend line, meaning they have more places to pop. But job growth and migration, job growth is starting to percolate, but migration, population in Atlanta has gone up a few percentage points in just the last 2 years, and it's up like 46% in the last 10 years. So that migration pattern ultimately heals all wounds.
Cleveland is the second city. Now, that's interesting to me.
Cleveland's interesting because obviously it's tied, it's right across Lake Erie from Detroit. It's tied to the American auto industry, and it got slammed because of the decline of the American auto industry. But in Detroit, they build cars. Hard to repurpose a car factory to build something else. In Cleveland, they built door handles, components, and they've attracted the medical device industry into that space. So they've been able to repurpose their job base and their factory base for a new industry. Unemployment is actually down almost 2 points in the last year, okay? 12 months in a row in declining unemployment in Cleveland. But the best part, home prices being way down, but they also have something going on for them at the State House. They've got John Kasich as their new governor. All right, John Kasich was Newt Gingrich's budget director. This guy knows how to get spending under control, and when he comes out and says that his mission is to make it a pro-business state, I believe him. So they've turned the corner. Their problems are temporary. They're probably behind them right now. It's a great place to buy.
All right, real quickly, a couple seconds. Where do mortgage rates go from here? Where do you think they bottom?
Where do they bottom? They can't bottom much further than this.
Obviously.
Okay, so I imagine that they're going to bounce around at this level. It's hard to imagine them going lower, but if the government has any kind of grip on that, and they appear to, they're not going to let them get much higher than 5% in the next 2 years.
Beautiful. So it's still, the time is right if you've got the cash.
If you have the right business plan and you understand how to hold the property till the revival of the market.
All right, thank you, Greg. Always good seeing you.
Thank you.
Lori?